The economic markets are in turmoil at the moment, with the US announcing a number of tariffs and then backtracking and then adjusting and changing. The financial markets have been up and down, mainly down recently. And there's actually speculation of what the impact is going to be on residential real estate here in Australia based on what's happening in the global economy. So in this video, I want to unpack the impacts on Australia's property market and what might happen in this year and the years going forward. So the USA and China are mainly going at each other in terms of tariff charges, in terms of imports and exports to each of those countries. And a number of other countries across the world have been hit up by the USA for tariffs based on their importing of goods. Now, personally, I've had clients asking me what I think about the impacts of these tariffs and what's happening in terms of the world economy. Now, we could see a financial crisis where everything implodes. Trading stops amongst countries, GDP goes down, and a lot of these countries go into real recessions. That is a real possibility. And so if you're in the property market and you don't have buffers in place, that could put you in a really tight position. But the thing I say to people about property prices plummeting at a broader scale would be a bubble bursting, for example, is that it's going to impact all the people in the property market. Anyone that owns residential real estate, if we have a bubble burst or an economic collapse, is going to all be impacted at the same time. And so it just lowers the scorecard for everyone. Whereas the inverse is true in terms of investing in property over a long period of time. That people are able to buy, hold, and purchase potentially more to amass a larger asset base and hold that larger asset base over a long period of time, get unfair gains, in my opinion. You know, if you hold a $5-10 million property portfolio and that goes up 10% a year, you're making $500,000 to $1 million in compounding growth year on year, compared to a mum and dad that might only be able to break in and buy their own family home and they hold it all with bad debt. And so this is where I'm not worried about these major tariffs and countries going against each other, because you have no control over it. You don't have control over what Trump says or does, or how the US reacts with China, or China reacts with the Australian government. There's plenty of talk out here online in the property space about what's going to happen and what are the impacts going to be on you as an individual in terms of your real estate investments, your own home. The reality is you don't have control. And so what I say to people is we need to control your controllables and not worry about the uncontrollables. And so what can we control when it comes to these tariffs being put in place and impacts on interest rates? In my opinion, if we see a recession or a near recession take place, the Reserve Bank in Australia is going to be incentivized to cut interest rates further. And that could only potentially fuel property prices further in terms of growth. And so rates cutting would allow people more servicing and more people to borrow money at a cheaper interest rate. And so those who are earning well and secure in their jobs or their businesses would be able to borrow more. And that would only fuel people running into hard assets like real estate, whereas stocks and crypto are going to be far more heavily affected by these economic collapses or these economic trade deals, because they are paper assets when they're traded. So this is why I think real estate is safe as houses. You're investing in a hard asset in an established area that's been built up for decades, and there's great existing infrastructure. And in Southeast Queensland's example, there's heaps of oncoming infrastructure where a bunch of trades are going to be busy on government projects and big private projects. And so we've got a lack of trades to actually create more assets here in the Brisbane market. Now, people might say we should fix that, we should build more homes, but the reality is that's not necessarily going to happen in these established areas, which are 2 to 40 kilometers from Brisbane CBD. And so that's why myself as an investor looks at what I can control. I can't control these tariffs. I can't control whether they cut interest rates, but I can look at my financial position with my mortgage broker. And so I work with the guys from Cube Home Loans, who are my brokers. And if you go to purposeprairie.com.au, you can book in a chat with them as well. And you can sit down like I've done, look at your financial situation, look at your potential borrowing capacity, and invest in assets that make sense at this point in time for you and your property portfolio. For most clients, and myself included, that looks like building a property portfolio which starts with capital growth. And so in Brisbane, you'd probably be wanting to buy houses at that higher price point, 800K plus in areas that are established on good block sizes. If you get closer to the city, you might be happier with a slightly smaller block size and lower yield, but have higher growth potential. And so for Emily and I, when we started building out our property portfolio here in Southeast Queensland, we bought 3 blue chip assets in the inner middle ring, and then we started going to outer ring properties on bigger blocks, and now we're adding granny flats at this point in time to balance out the property portfolio from growth first to cash flow second, and then consolidation is that third phase. So I'm not worried about these global markets and what's going to happen. I'm looking at my own position and what I can control. I can control my finances. I can control relatively some of my savings. And there's always going to be expenses that we have to pay. Childcare, food, electricity bills, they're just going to be a known quantity. And those things have gotten far more expensive than a few years ago. And so you just got to include that in your budget, see what disparity you can create between your income and expenses, and then look to invest your money well for the future. That's the thing with this talk about the markets is it's very short term. Everything tends to be, only the next few weeks or the next few months. When you're making a property investment decision in terms of residential real estate, that's where I think it's a 7-year decision, a 7 to 10 year window that you're looking at. And so if you look at Brisbane, for example, and you look at the next 7 years, do you think Brisbane property prices are going to be significantly higher in Southeast Queensland in 7 years' time? My answer is a resounding yes. Based on the history, based on the potential, the infrastructure, the land supply in Southeast Queensland, that's why I'm so bullish. And I've bought a number of investment properties around Southeast Queensland, including in Logan, in Brisbane, Moreton Bay, and Ipswich City Council. And so you've got to look at that from your own lens and your own situation and make a long-term investing decision, not worry about the short-term ups and downs in terms of the markets and what you can't control in terms of tariffs and governments going against each other when it comes to trade. And this is why I love residential real estate. It's probably one of the safest assets in the world in terms of a need and requirement. It is a need. It is a basic need that we all have in terms of shelter. And so people have encouraged me recently to look into more commercial properties, and there's certainly an appetite for that with a high yield profile, but also commercial assets are going to be more impacted than residential assets when it comes to trade and economic performance. And so that's why I love residential real estate is it's more growth focused. You can add a bit of cash flow with secondary dwellings and some minor renovations to boost your equity along the way. And so for me, it's that multi-lever strategy I've spoken about recently in other videos where you can buy a site, you can do a little bit of value add with a renovation, and then at a later date, pull another lever cronk and add a granny flat to boost the cash flow. And so that could be an end game as part of your property portfolio. It's not the only way though. So you could buy some commercial assets and then mix it with your residential, which a lot of sophisticated investors do. Or like I've done, buy a unit block. And so that's branching out essentially into the pseudo commercial residential space where you've got more units maybe on a single title or on multiple titles, and that's going to boost your income that way. So whatever the options are in front of you, I think you need to evaluate them for their merit and look at where you are right now and how you can take action moving forward. I've done lots of different free sessions with people and paid sessions where we help people with these strategies. And I'm a chartered accountant by trade. So my previous history is as an auditor, then working in the commercial sector as a chartered accountant, and then running the buyer's agency here as the director and owner of the business in Purpose Property the last 4 to 5 years. And so myself and the team focus on this Southeast Queensland market. But we're also now offering strategy sessions or portfolio planning for people who want specifically my time and to break down over an hour-long session exactly where they are right now and what they could do in terms of structuring their property portfolio to build a plan for the next 3, 5, 10 years. If you're interested in our buyer's agency services or portfolio planning, if you're not looking to buy in Southeast Queensland, then head over to purposeproperty.com.au to book in one of those sessions and have a chat. I'd love to hear from you in the comments below. What do you think's going on? Do you think there's going to be a rate cut based off the back of these trade tariffs and trade wars? And do you think that's going to fuel property prices moving forward? And give this video a click over here because YouTube really thinks you'll like that one. So I'll see you in that video. Peace.